Hello, hello, hello. Welcome to the stream. Today we're learning technical analysis for day traders beginners. Now, we have 30 examples, 15 examples of moving averages, 15 examples of Bollinger Bands, and let's start. Okay, so starting off, we will start with Netflix. Example one. Netflix, as you can see, this was a trade. As you can see in the video I posted, I made $630 from a $30 contract, 2,000%. Now how? Well, at 3:30, pretty sure, I checked because I always recommend checking from 9:30 to 10:30 and from 3 to 4, checking TC 2000. And so I checked and I checked that Netflix broke downwards the moving average of 20 and 40. And so, of course, I bought a put to the moving average of 200. As you can see in the strategy I always teach. So from 436 to 429, I bought the put. Now, the goal was a 5-point put. What happened with Netflix was that I bought it here, and then when I checked the next day, it was already at like 404. And I immediately sold 2,000%, ecstatic. It kept going down to like 396, of course, but always, 2,000%, of course you're going to sell. And that was a strategy. That was a strategy. I made 2,000%. I was going to win anyways because I bought it from 435 to 428. Now, how does the strategy work? Why did I buy it? Well, I bought it because, first of all, the stock broke the moving average of 20 and 40, and the moving average 20 and 40 did a cross. When the moving average 20 and 40 do a cross, you immediately, A, buy a call if the stock is above, or B, buy a put if the stock is below. In this case, it broke downwards, did a cross, the stock was below. I immediately bought a put to the moving average of 200, as I said. And then that was my profit. That was the trade. Simple as that. I did it from here to there. When I woke up the next day, it was already about like 404, and so I just sold it there. And that's how I made 2,000% with Netflix. That is how the strategy works. Now, if you want to see a call, an example of a call in Netflix, I mean, a perfect situation is like right here. Netflix, they were about to cross. It doesn't matter if the 20 and 40 cross. I mean, if they do cross, it's like a 95% chance. If they don't cross, but they're close to crossing, it's like a 90% chance. Still a call, still a put. You can still enter the trade. And so it was above the moving average 20 and 40. And the moment a stock is above or below the moving average 20 and 40, it will always, 100% of the time, look for the next moving average, the moving average 200, and then the moving average of 200, of course. So right here, you buy a call immediately from 416 to 424. It's about an 8-point call. That is extremely good. That is an extremely good trade. And so after you do that, you go and then it breaks moving average of 100. Of course, you buy two contracts, one to the moving average of 100, one to the moving average of 200. Then it goes from 424 to 435, about 11-point call. If you left one contract the full way there, as you're supposed to, you buy two contracts, that is an incredible profit. Absolutely incredible. That's how the trade goes. The moment you see a stock above the moving average of 20 and 40, and they're pretty close, you buy a call. If the stock is above, you buy a call to the next moving average. Boom, boom. If the stock is below, you buy the put to the next moving average. Boom and boom. Now, next example, it will go with Nvidia. Boom. Make sure the live stream is Okay. Nvidia, same thing happened. It was decreasing. It broke the moving averages of 20 and 40 downwards, as you can see. And then it goes from 481 all the way down to 457. Wow, that is about a 30-point put. Wow. 24-point put, which is absolutely incredible. Simple as that. The moment a stock breaks the moving average of 20 and 40, if it's below, if it breaks it downwards, it's going to search the next moving average. And right here, the next moving average was the moving average of 100. And boy, did it go down. And then if you bought two contracts, you could, sell one there and then sell the next one here. That is a full 30-point put if you waited to the moving average of 200. Again, absolutely incredible. Oh, let me just check if the stream is going well. If you waited to the moving average. Okay, it is going well. Okay. Now, as I was saying, it broke the moving average of 20 and 40, went all the way down to the moving average of 100, then 200, and as you can see, it did do a cross, which is a 95% chance. The moment the moving average of 20 and 40 cross, it is a 95% chance. It is exploding upwards. But if it's close, like here, and it didn't cross, still 90%. Still incredible. Now, that's about 30 points. Absolutely incredible. We can see like a call here. Breaks the moving average. See, about right here, I wouldn't operate. Here because, as you can see, it crossed, right? It broke the moving averages downwards, moving average of 20 and 40. But there's nothing, there's like nowhere to go. Like, there's no moving average below here. There's no moving average of 20, there's no moving average of 200 or 100. There's just no moving average. So, like, I just wouldn't operate this. Now, when it goes up and it breaks moving average 20 and 40 upwards, this is where I operate. Like right here, a juicy call from 436 to 448. That's a 12-point call. That is an incredible, that's incredible profits right there. Especially with Nvidia, a stock so volatile. And then, of course, the best trade is from right here to right here. Absolutely incredible. The next stock we will be checking, Tesla. You guys are enjoying your day, learning. Tesla. Okay, what can we check up Tesla? Well, see right here, the moving average of 20 and 40. This is for next week right here, right? So the moving average 20 and 40 look like they're about to meet. And then if Tesla breaks the moving average of 20 and 40 next week downwards as they meet, that is a gigantic put. Oh my gosh. I'm definitely getting in there. Of course, the moving average of 40 has to go all the way up, cross with the moving average 20. Tesla has to break it downwards, and then if it breaks it downwards, we're looking at a 30-point put, which is absolutely incredible. Netflix reminiscent. Yeah, Tesla did not have a lot of moves this week. A lot of this strategy, a lot of people will tell you, oh, this strategy is like daily, blah, blah, blah. It's not daily. Sometimes it's like a move a week, maybe 2 moves a week, 3 moves a week. It's not daily at all. And as it should be, because sometimes the stock market just does not move. Like sometimes the Fed is talking and the stock market does not move for like 2 to 3 days. And anybody that operates while the stock market is not moving is losing, because it's just, who the heck is getting money here? Like, there's like no analysis. It breaks upwards, it breaks downwards, blah, blah, blah. There's no analysis here. Yeah, there's like just choppy. It's nothing. But there is one thing. I just checked it right here. This is why you gotta analyze a little bit better. And once you're more experienced, you'll find out like 3 minutes how to analyze a stock. It took me like a minute because Tesla was a little wonky here. But as you can see, Tesla breaks the moving average of 20 and 40 upwards, and it crosses. As you can see, the moving average 20 and 40 cross, and Tesla breaks them upwards. Now, right here, you buy a call. Right here, you buy a call. Most definitely buy a call. But then, as you can see, it just like goes a little bit downwards. Now, you may be thinking, damn, this strategy sucks. So it went downwards. Oh, it took one. Okay, it started at 23, right? The 23, 24. Okay, 20. Okay, wait. Okay, so one. So let's say you bought it here, right? And then it took 1 day, 2 days, 28 is like a whole 3 days, 4 days, 4 days. Wow. So this happened like Wednesday. If you bought Tesla for next week, in 4 days it went from 237 to 253 because it broke the moving average 20 and 40, and then it went all the way up to the moving average of 100 in 3 days, and in 4 days, wow, almost reached moving average 200, which is like 230. What was it? 238 to 253. It's about 15 points in call. That is incredible for a Tesla call. And bam. Yeah, this strategy, you can definitely give it 1 to 3 days if it happens on a Monday. If it happens on a Wednesday, Thursday, just buy for next week. Just buy for next week because, it might take 4 days. Usually takes way less. Like right here, it took a lot of time. Like this is abnormal. This is an abnormal time. But it did reach a lot. Like it did go up. So like if you bought it for next week right here, oh my gosh, you went through like, bad times. But it ended up paying well. Absolutely well. The moment the stock goes up 15 points, you're getting paid. It doesn't matter how much time you had to wait. Now, moving on from Tesla. Tesla was a little tricky here. Personally, I wouldn't have operated Tesla. I'm definitely going to operate this, though. When the moving average of 40 goes up and then it crosses the moving average of 20, then Tesla breaks downwards all the way down to like 246. I'm definitely operating that. Definitely. But if you operated this, you're still like, this is a lot of profit in 4 days. Bam, right there, 253. Again, that is an abnormal period. And, we check every stock. Like any other person, we just like choose your stocks and choose the stocks that like best moved with the strategy. No, we're checking every stock and we're checking the strategy with every stock. And the strategy, I didn't create it, of course. Whoever created Bollinger Bands, whoever created moving averages, they created the strategy. I'm just very good at learning, and I learned it very well. NVIDIA, and I'm teaching it. NVIDIA. This is an incredible stock for the strategy. I mean, personally, the best stocks for specifically the moving averages, because we use two strategies in this channel, moving averages and Bollinger Bands. This is Bollinger Bands. The best stocks for moving averages are NVIDIA and Netflix. They are incredible, absolutely incredible. Because the amount of volatility, the amount of points they drop, and the amount of money they give is absolutely incredible. NVIDIA and Netflix, absolutely incredible. These are stocks you should be checking daily for moving averages. Now, as you can see, I mean, if you listen, like you can analyze this by yourself. Broke the moving average of 20 and 40 downwards. And what do? You buy a put from 482 all the way to the moving average of 100, then moving average of 200. Bam, right there. That is about 481 to 457. 15 points, 14 points. Absolutely incredible put right here. You buy two, absolutely incredible, 452. Nvidia, looking amazing. Strategy works every time. I mean, it does work every time. Right here is at 95% because of the cross. Works every time. Tesla, bam. Again, works every time. With Tesla especially too. It did work. Did it take some time with Tesla? Because, maybe like some bad days happened, some news happened. Yeah, but in 4 days, did it go to the analysis? Of course it did. 5 days, reached the moving average of 200. Your contract should always have a minimum of 4 days. So, for example, if you buy it Tuesday, buy it for the same week. It's perfect. If you buy it Wednesday, your contract, you can buy it for the same week, but always have a contract for next week. Always give it 4 days minimum. And usually it takes about 1 to 2 days, but just in case a situation like Tesla happens again, 4 days minimum is absolutely perfect. Next stock we're going to check is SPY. Okay, SPY. SPY is a very tricky stock, by the way. If you are a beginner, you should stay away a little bit from SPY for now, because SPY does give a lot of profits, but it is also a little bit tricky. But not here. Absolutely incredible. I mean, as you can see, here it broke downwards and moving average 20 and 40 cross. But then again, I don't trade this. I don't recommend anybody trade this because there's no moving average below. There's no moving average 200 or 100 below. So you don't know where the stock is going to go. Like, of course, it breaks moving average of 100 and 4. It makes a moving average of 20 and 40. It's going to go down, right? Like, you can buy a put, but you don't know where because there's no moving average of 100 or 200 to guide you. So this is why you don't operate this. But after the cross, the cross makes it very legitimate. It breaks moving average 20 and 40 SPY upwards, and guess where it goes? Right here from 440 to 444, moving average of 100. You buy two contracts, of course, always. Then it goes all the way up to 449, 9-point call in SPY. Absolutely incredible, especially because it's SPY, and SPY, if you know, pays extremely well. I mean, for 3 points, SPY is giving you like $300 depending on your contract. For 9 points, you're talking about $2,000 in a SPY. Like, SPY is like one of the most volatile stocks in the stock market, one of the most traded stocks in the stock market. And so when it goes up a lot of points and you're in it, especially in the money, you're bagging. Okay, so you see this move is extremely easy. The strategy, you're going to do perfect with it. Okay, stream is going well. Then about right here, I mean, I wouldn't really operate because the moving averages are so close together. Like right here, absolutely incredible opportunity. Like absolutely incredible. I'm operating this every single day. But right here, the moving averages are so like together. There's not a lot you can do. Like I wouldn't recommend trading right here. Like yeah, it breaks the moving average of 20 and 40 with the cross. It's gonna go from 47 to 448. That's amazing, but they're so condensed. It's like not worth it. Next stock, IWM. NIWM. Okay, let's see. I mean, we're analyzing this live, by the way. Like, as you can see, I'm analyzing it with you. I'm not like, okay, I already analyzed these stocks beforehand. No, I'm analyzing these with you. That's why I'm taking like about 30 seconds, 15 seconds to analyze it and what happened with it. And I'm giving you some moves. Like, I already told you what's going to happen with Tesla. Like, if Tesla... let me just bring that up again. Its moving average of 40 goes up and then meets the moving average of 20. They cross. Tesla breaks downwards. I am buying a put all the way to 248. So, stay for the live stream. You're getting some moves. You're getting some moves. All right. We were at IWM. Okay, so with IWM, I mean, pretty simple. It breaks the moving average of 20 and 40. They do a cross here. It breaks it upwards. So, of course, you're going to go to the moving average of 100 from right here, 185 to 188. Oof. Incredible. Then you buy 2 contracts, of course. And then it goes 192. Wow. So from 185 to 192, that is about 7 points. You're bagging. You're bagging. Absolutely incredible. Yeah, that's how the strategy works. And then right here, it breaks it like downwards. The moving average of 20 and 40. They do a cross, so you of course buy a put. The moment they do a cross and they breaks it, you buy a put, but like it's 186. See, it goes downwards, right? It goes down. Of course it goes down. It goes down from 186 to 183. But again, I wouldn't operate. Why? Why wouldn't I operate this? Like this situation, of course I would operate this. This situation, I wouldn't operate. Why? Again, because there's a moving average of 200. There's a moving average of 100. It's unsafe. Like, you don't know if it's going to go here and then go up. If it's going to go here and then go up. It's going to go here and then go up. If it's going to go, yeah, you don't know. So, uncertainty, not good. AMD. With AMD. Okay, let's analyze it together right here. Okay, right here. Breaks moving average of 20 and 40 downwards. Hello. Yep. Breaks moving average of 20 and 40. Okay, yeah. The live stream is going well. Breaks moving average 20 and 40 downwards. It goes from 107 to 106. It's a pretty mid-level put. But then it keeps going downwards to like 103. I mean, you can. Here, I recommend, because some people are going to trade this, right? Like, they're going to trade. Like, again, I would sell just right here because there's no moving average below. But some people are going to trade further. So I would just recommend, like, getting your 100% because it's going to keep going down. You just don't know where. So just get your 100% in the dip. So that's what happened with the AMD. So incredible put right here. Like, you see, it breaks a moving average of 20 and 40. There's a moving average of 100 and 200 near, so you don't know where it's going to go down. But again, you just wait for that 100%. You're out of there. I mean, this is like, oh, this is not 100%. 107 to 100, that's 1,000%. So let's say, like, you say 100% that I'm out, no moving average. Bam. Made a profit for the day. All right, let's check Roku. I haven't checked this stock in a long time. Wow. Okay. Wow. It works well. Okay. So with Roku, breaks moving average 20 and 40 downwards. They do a cross, and moving average of 200 and 100 are below. Thank God. So bam, right there, you buy a put from 83.88 to 80. 3-point put in Roku. That is very good, especially in a stock like Roku. Yeah, very good. And bam, you make your profit from $84 to about what, $80. It's a 4-point put. Very good for Roku. For a stock like Roku, absolutely incredible if you're operating that. And I mean, right here, they do wow, that is a triple cross. 20, 40, and 200 cross. And the stock breaks it upwards. So it's like 100% going to go to the moving average of 100, which is from 78.31 to 81. Again, it's like 3 points, 4 points. But a stock like Roku, 4 points is a lot. And, you buy your 3 contracts. You buy 4 contracts with a good strategy. Like right here, this is 100%. Because 20 and 40 cross is 95% chance it's going to go up to the next moving average. 20, 40, and 200 cross, like, it's certain that it's going to go to the next moving average. You buy 5 contracts here, bam, you're it. ABNB. By the way, stream's going to go for some time. And we're analyzing this together. I'm gonna tell you my thought process. So first, I always check where the moving average of 20 and 40 are if they're crossing. Then where the moving average 200 and 100 are located. Wow. This is going to be the first trade live for this channel. People, ABNB broke the moving average of 20 and 40 downwards, and the moving average 20 and 40 crossed. It is a 95% chance ABNB is going to go to 137.75. About a 5-point put. It breaks that, it's going to go to 134, 8-point put. So, you buy 2 contracts, sell one here, sell one here. Wow. This is the first live move in this channel. There's many more to come. If you follow this strategy, well, no, you are following this strategy. If you learn this strategy, you will now operate. Wow. See, this is why you got to check from 3 to 4, because this happened right before the stock market closed. So on Monday or Tuesday, this stock is going to be at the moving average of 200 or 100, about a 5.6-point put. Wow, absolutely incredible. Let's just see this. Broke the moving average of 20 and 40 upwards, hits across, and then goes all the way to moving average of 100, 131. Okay, so 136 to 131, 5 points. Then it goes all the way to moving average of 200. Wow, 126 to 140. That is about, 14 points in call? Wow. Wow. And we have a live trade right here. So, yeah, people who are watching the stream, congratulations. You just got yourself a 5-point put. Bam. A 5-point put just for watching the stream. Just make your money. It's because it's going to reach moving average 200. And then might reach the moving average of 100. But it's definitely reaching one of them. So it's so 142 to 137. 5-point put in ABNB. Congratulations, guys. You just got yourself a first trade using this strategy. Wow. Absolutely incredible. Coin. Let's see coin. How much? Let me just check the live stream real quick. How much time we've been? Yep. Okay, we've been streaming for some good time. Okay, so let's check coin. What a call. Coin broke the moving average of 20 and 40 upwards. The moving average 20 and 40 cross, as you can see. And then coin goes from $75 all the way to $82 in one candlestick. One candlestick. That is 75 to 82. 7 points in call in one candlestick. By the way, for the people that are, beginners and day traders, one candlestick is absolutely massive. It is 1,000% more profitable for a stock to move 5 points this way than this way. Why? Because it takes some time. It takes some time, blah, 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 up and down, up and down, up and down, up and down. There's a thing called a theta. There's a Greek letter called a theta in contracts, which the more time a contract takes to move, the more money it takes away. So when a stock does this, just one candlestick, 7 points, that's $1,000 in a good contract. Straight up, $1,000 in a good contract. Heck, $60 contract, bam, you're in. That's in the money. $60 contract from that with coin, you're in the money. Minimum $600 right there and there, right then and there. Absolutely incredible. Which is a moving average of 100. Now, some people are waiting for the moving average of 200. But again, I always say in this channel, 2 contracts. You sell one here and you leave the other like to the moving average of 200. All right, it didn't reach moving average of 200 because sometimes if it's like two, like I mean, like look at this, it's like 86. Moving average is like a 90 or something. If it's too big, it's probably not gonna reach, right? But you're still bagging because okay, one contract didn't reach that, but the other contract made you $1,000. This probably cost 60. I mean, 1,000 minus 60, that is a 940 profit. Strategy's looking amazing. You know what I mean? Now, moving average of 2040 cross. The stock breaks upwards. So, of course, it has to reach the moving average of 200. And it goes, like, it almost reaches, like, as you can see, it goes, like, to 80. It's at 88. It's like, it reaches $87. It's like, you buy two contracts. You sell one at, like, 100%. But there's just one moving average. Bam, that is absolutely incredible. And it's going to reach the moving average 200. You said the moving average of 200 is like going downwards. So it's probably going to like go to like 84 and then it's going to meet up there. Because they're about to cross. Moving average of 20 and 40 are about to cross again. It's going to break it upwards. Yeah, it's going to reach a moving average of 200. Yeah, wow. Coin, absolutely incredible. Next stock. Apple. We got like 1, 2, 3, 4, 5, 6. We got like 6 more examples in moving average, and then we're gonna go to Bollinger Bands and 15 examples of Bollinger Bands, and then we're gonna call it a night. Apple. Apple breaks the moving average of 20 and 40 downwards, and they do a cross. That is a 95% chance they're gonna reach the next moving average. And it goes from 184 to 179. That is a 5-point put. Wow. Absolutely incredible. Especially for Apple. Like a stock, bro. A stock like Apple moves 2 points and you're already like making a lot of profit. 5 points, you're bagging. Because you're probably in the money. It's a stock so cheap. This is the thing with Apple. It's a stock so cheap that when it moves 5 points, you're like almost certainly like 2 points in the money. And when you're in the money, it's a minimum like $300 that you're getting. And if like the contract is like, it's like 3 days more, you have like 3 more days and you're in the money, it's probably $500. That is incredible. And I'm talking cheap contracts, it's like $30 to $60. Like if you buy a lot of contracts at $30, $60, probably like, some people buy like 5 to 6 minimum. I mean, multiply 5 times 300, 1,500. 5 times 6. Oh, no. 6 times 300, $1,800. Incredible week. I mean, you're not getting that in any job in one day. I mean, you can, of course, depending on your job. But again, the bigger the capital, the more contracts you can buy, and the more. Traders with this strategy, the person I learned this from, gets like about minimum 10K a day with his good gains in a week being 50K. Now, breaks moving average of 20 and 40 upwards. Apple breaks moving average 20 and 40 upwards. Reaches a moving average of 100, breaks it right here, breaks it. That's why you buy 2 contracts. Goes from 178 to 179, breaks it, and then it goes all the way up to 200. That is a 178 to 188. That is a 10-point call in Apple. Guys, I just told you. Apple is one of those stocks where it's extremely cheap. Like 2 points out the money, that stock is costing like $60, like a contract, right? So let's say $60. Let's say you just buy one for $60, right? It goes to 10 points. Okay, it goes up to 10 points. You're in the money by like 8 points, right? You're in the money by 8 points. That is about $1,500, about what minimum $1,000 in that contract. If you're in the money, 8 points in Apple, and you have like 2 days remaining, come on. If it's like for next week, come on, $1,000 minimum if it's 8 points in the money, Apple. Now let's say for that $60 contract, you bought like three times 60, 180. It's not a lot. $180, 3 times 1,000, $3,000. How long did it take? Let's see right now. How long did it take? Breaks moving average of 20 and 40, 179 to 188. Started off at 828. Okay, so 29, 1 day, reaches there, the moving average of 100. Hold up. Did it do it in 1 day? Whoa. Okay. Ooh, wow. It reached like 187.42, nearly 188 not in 1 day. 28 to 30. 2 days. In 2 days, Apple went up 10 points with this strategy. Again, Tesla's an anomaly. 4 days is a lot. Like, it's going to reach the moving averages. Like, the strategy is going to work, right? But Tesla being 4 days is an anomaly. This did it in 2 days, 10 points, absolutely incredible. And let's say you got got a little bit antsy. Broke the moving average of 20 and 40, and it goes, you bought it from here, 177 to 181. That's 100%, by the way. Like 177 to 181 is like about 4 points. Bragging already. But let's say you were waiting for the moving average of 100 and 200. You're like, oh, come on, blah, blah, blah. Okay, so 823, it took to like 830. Okay, so 823, 824, 825, 828. Oh, by the way, this is probably like a Friday. Yeah, this is definitely, Friday, Monday. Okay, so let's see how many trading days it took, right? Okay, so 1, 2, plus 2, 4 days. Yep, strategy. Yep. As I said, always buy a contract with like minimum 4 days. So this happened Wednesday. Yeah, no. If the move happens on Wednesday, you just buy for next week. Just buy it for next week. Trust, buy it for next week. And once you buy it for next week, that contract, like, it does not matter. If you bought it for next week, it does not matter that the stock went down from 181 to 176, about like 5 points. It does not matter, because it went all the way up to 188, and no contract is staying negative once it goes up to 188. And you know what you can do? When the stock is here again, guess what you do? You buy another contract, even it out. So, for example, right? Let's say you have a contract. This is a video for beginners, so I'll explain this. If you have a contract, if you bought a $20 contract, right, and it is negative 50%, so it's negative $10. If you buy the same contract again at the same price, right, $20, the contract is going to even out your losses. And so your losses will go from like a 50% to a 25%. So instead of your losses being $10, it's going to cut. Like, this is called, people call this like evening out. There's other terms for this, but there's like evening it out. And so, like, when you're negative on a contract, but the analysis is going to go, like, in 4 days, like right here, oh my gosh, it goes down. But, in 4 days, this stock is going up. This stock is going up, right? It's going to go up all the way up here. It's like a lot of potential. So, you buy another contract, right? The moment you buy another contract, let's say you buy like 2 more, it's pretty cheap right now. So you buy, like, maybe it was expensive here. Right here, it's cheap. You buy like 2 more contracts. you double down on it, triple down on it, profits are incredible. Absolutely incredible. Now, how many stocks do we have left? 1, 2, 3, 4, 5. Okay, we got like 5 stocks here. All right, let's hurry it up. Broke the moving average from 20 to 40. The moment it breaks moving average 20 and 40 upwards, but there's a moving average, like there's a moving average above, just buy it like for 100%. And bam, 100%, you know, make a profit that way. There's not a lot of moves here. Oh, whoa. Never mind. This is absolutely incredible. Guys, look. And ladies, look. Amazon broke the moving averages of 20 and 40 downwards. 138, and then it goes all the way down to the moving average of 100 and 200. Goes from 138.65 to 133.71. That is 5 points. And you of course buy 2 contracts, so you sell one here at 100, then you buy the other one when it reaches 200, and it goes from 138, about 139, to 132. That's about 7 points in put in Amazon. A stock like Amazon, guys, again, a stock like Amazon is extremely cheap. So 2 points out the money, that stock is costing like $60, $50. So you buy that contract $50 and it goes down 9 points, or it moves 9 points, you're in the money by like 7. You're in the money by 7. You're making about minimum $600 to $1,000 in that contract, depending on the volatility and everything. That is absolutely incredible. And if you bought 3 contracts, again, 1,000 times 3, $3,000. Absolutely incredible. Okay, speeding this up. Let's go with Google. Oh, by the way. Ooh, live trade, boys. Live trade. And ladies, live trade. Amazon broke the moving averages of 20 and 40 downwards, and they're about to cross, as you can see. Downwards. The moment they cross, wait for them to cross, of course. Just wait till Monday until they cross. The moment these cross and Amazon is below them, 140 to 136, 4 points. 140 to 134, 6 points. Come on now. That is a live trade. I've given you 2 live trades as live stream. So if you've been paying attention, if you've been listening to the live stream, you got 2 trades that can potentially give you 1,000%, depending on how many contracts you buy and what is your strike price. I gave you ABNB put from, we're going to check it right now. I gave you ABNB put from 142 to 137, about a 5-point put. You buy 2 contracts, of course. 142 to 134, that is about 8 points. 8-point put, in ABNB. Live. This is live. On Monday, you buy these puts, especially if the stock is still below the moving average of 20 and 40, and they already crossed an ABNB. You buy these puts on Monday, and you make your money for the same week, because Monday, you already have, if it's Monday or Tuesday, you buy for the same week. Wednesday, you buy for next week. And, what were we checking? Amazon. Yes, Amazon. And we were checking Amazon. And so, Amazon, same situation. On Monday, if these 2 cross, we're average 20 and 40, and the stock is below them, you buy a put from 140 to 135. That is a 5-point put. Absolutely incredible in Amazon. And you're gonna buy close, so you're definitely gonna be in the money. You know what I mean? You spend $60 on Amazon, you're gonna be in the money. Okay. Google. Guys, this live stream is getting pretty long, and it's pretty late, so we might do a part 2 of this live stream, and we're gonna do Bollinger Bands on the next live stream. This live stream solely moving averages. I mean, but again, I'm giving you 2 live trades. Of, giving you 15 examples. I mean, I'm going to give you 15 examples. We have like 3 more. So, Google. Google broke the moving average of 20, 40, and the moving average of 100 upwards. So, of course, you buy that 100%. Bam, you get that. And they cross. So, when Google... All right, let's see what we can do here. Boom. Not a lot to do with Google. Not a lot at all. All right, moving on to the next stock. There's not a lot to do with Google. Yeah, I mean, you make your 100%, of course. Every time it breaks like the moving average of 100 and of 20 and 40, and it crosses, you just make your 100%. You see what I mean? I mean, if you wanted, you could like leave it for more, but there's like no moving average above, so I just wouldn't do it personally. You just get your 100% and you're out. Okay, 3 more. Baba. Broke. By the way, guys, we're analyzing this live. That's why I've said it like 3 times, but we're analyzing this live. That's why it takes like 20 seconds for me to analyze this. And again, my thought process, always check for the moving average 20-40, where they cross, where the moving averages of 100 and 200 are located, and that's my thought process. Now, Baba breaks moving average of 20, 40, and 100. That is I mean, if the moving average, if breaking the moving average of 20 and 40 as they cross is like a 95%. I mean, breaking 3 moving averages as they cross is like a 98% chance. I'm making 98% up, but I mean, it's got to be higher than 95%. Okay, so Baba breaks the moving average of 20, 40, and 100. So 100%, just go into that put. Right? And then it goes from 96 to $90, which is the moving average of 200. That is about 6 points in Baba. A stock like Baba is mid-level cheap. And so you're definitely in the money. Maybe like by 1 point you're in the money. So yeah, that's like $600. Absolutely incredible, Baba. I mean, we're not going to check further because right here it's like pretty condensed. But if you can see, breaks moving average of blah, blah, blah. Of 20. It breaks moving average of 200. It breaks moving average like 20 and 200 like right here downwards. And so you just buy a put from like 194 to 91. But again, it's pretty condensed, so I just don't operate this. I do operate this, though. This is incredible. 2 more. Meta. Breaks a moving average of 20, 40 upwards as they cross. I mean, 100% going into a call like this. This is a 95% chance. And it goes from 289 to 298. 10 points. Yeah. Oh, wait. Okay. 8 points. And then it goes all the way to moving average of 200. Let's do some math. 290, 304. 14 points. 14 points in call. Absolutely incredible. And so, yeah. Meta. You buy your call like from right here to right here. You buy 2 always. Reaches the moving average of 100. Then reaches the moving average of 200. Absolutely incredible. 2 contracts. They both got fulfilled. So you made a lot of money with Meta if you operated this. Well, now you're going to operate this. And yeah, absolutely incredible. And as you can see, live trade. Breaks moving average of 20 and 40. This noon breaks the moving average of 20 and 40 and the moving average of 200. So it's like a 95% chance it's going to reach the moving average of 100. So, yeah, watch this. 299 to 296, 295.51. So about about a 5 point, about a 5 point put. It's pretty good. It's pretty good. With Mets especially. Again, cheap cons. Again, the expensive cons are Netflix and Nvidia. Like, for example, you wouldn't do a trade in Netflix or Nvidia for 3 points because they're just like, they cost more. They're not expensive because, nothing is expensive if you have the money, but they do cost more. Microsoft. The last stock we're going to check for this live stream. If you've been checking, we already gave you 3 live trades. We gave you A, B, and B from 142 to 137, a 5-point put live. You can buy it on Monday. What was the other one? What was it? Amazon? Yes, Amazon. If on Monday the moving average of 2040 cross and Amazon is still below them, a 5-point put live, and then Microsoft. No, we didn't get Microsoft. What? Meta, live right here. And they're about to cross. Moving average 2040 about to cross. Live from 299 to 295 on Monday. Live. Now Microsoft. Let's check it out. Microsoft breaks the moving average of 20 and 40 downwards. They cross right here. So, of course, you buy that big put. You buy that big put from like 345 to 345 to 335. That is an incredible 10-point put because you always buy from first to the moving average of 100, and you buy two contracts minimum, and then it reaches the moving average 200. That is about 10 points. Absolutely incredible profits made from that, and then it breaks moving average of 20 and 40 upwards. Breaks moving average of 20 and 40 upwards. Breaks moving average of 102 upwards. Okay, so 95% chance if the moving average of 20 and 40 cross and the stock breaks them upwards or downwards. 95% chance to reach the next moving average, right? Now, when it breaks 3 moving averages, that's like just going. It's 100% certain. And so, yeah, it breaks moving average of 20, 40, and 100. 3 moving averages. You buy that call from 323 to 333. That is about a 10-point call to the moving average of 200. Wow. That is about a 10-point call. Absolutely incredible. I hope you guys have enjoyed this live stream. I hope you guys have enjoyed this video and you found it informative. You learned a lot. Part 2 of this live stream, we will be teaching Bollinger Bands. Of course, we just checked 15 stocks for moving averages. I don't think we can check 15 stocks of Bollinger Bands. Nah, we can't today. Took us an hour to check 15 stocks for moving averages. So next live stream, we will be checking this. We will be learning. I will be giving 15 examples on how to learn this Bollinger Bands, how to use them. As you can see, they are very useful. So, if you combine moving averages, bam, with Bollinger Bands, bam, you're absolutely incredible. You're cracked. And if one day moving averages is not working, like for example, Google is pretty wonky because it didn't as you can see, Google is pretty wonky with moving averages because there was no moving average above them. It broke the moving average of 20, 40 upwards. No, it broke the moving average of 20, 40, and 100 upwards. But the moving average of 200 is below. So, you didn't know where Google was going, right? But with Bollinger Bands, you could find out. One example right here. One example. Before sleep. All right, so with Bollinger Bands, I'm going to give you a short example. With Bollinger Bands, I will explain it in the other live stream. It broke the Bollinger Band right here at 133. And when a stock breaks the Bollinger Band, Uh, you go from well, no. It goes up for minimum 1 to 3 days, and so I mean you can see it like right here. It goes from 133 to 137. And when does it start? All right, let's see, because it needs to be like the next. Okay, so 8:30, 8:31. Okay, so 1 day, then 2 day, then 3 days, then 4 days, 5 days. Whoa! It reached 137 here. Okay, wait. Let's recount this. Okay, so it starts here. 1 day, 2 day. Bam, 2 days. Wow. 2 days. 134 to 137. Wow. 3 points. Wow. 2 days. Yeah, that's the power of Bollinger Bands. I'll explain it on the next live stream. This is just an example. I haven't explained what Bollinger Bands is, so don't worry if you don't understand it. I explained moving averages, though, so you should know this. And so, explain Bollinger Bands next live stream. Hope you guys enjoyed. Please like, subscribe, and comment if you did. And thank you for everything. And just before we have like 3 minutes until an hour reaches. I want this live stream to reach an hour. Quick overview of the stocks that we said we're going to go up, or that we're going to move and we could operate. We said A, B, and B. A, B, and B on Monday. If it wakes up, let's just say it wakes up. If it wakes up and it's at 142 below the moving average of 100 of 20 and 40, it's gonna go down. It's gonna go down 100%. So it's already a 95% chance it's gonna go down to 5 points. 5 point put, absolutely incredible. And again, ABNB, it's pretty cheap. I mean, I think we can check the contracts like right now. Let's see the contracts. Let's see the contracts of A, B, and B. Of course, the stock market is closed right now, so it's not going to give us like what the contracts are going to call them, what they're going to cost on Monday, but they are going to tell us what they costed today. Okay, so for next week, how much did they cost? Whoa. Pretty heavy cons right here. Okay, we said it was going to go down to 137. So about 5 points. 137 strike costs $78. So if you want to go like one step above 136, $63. It's pretty good. $63 for that put. It's pretty good. It costs $63. So when it goes down, I assume this contract is going to cost about $300. So from $63 to $300, it's pretty good, especially if you buy two. Let's just check the contract for Amazon. 2 minutes. 1 minute and 30 seconds. Again, you have to wait on Monday for these two to at least get a little bit closer. Like 20 and 40 need to get a little bit closer, possibly cross. The moment they cross is like a 95% chance. But if they get close, it's a 90% chance. It's pretty good. And Amazon has to stay below. If these two things happen, these two get close and Amazon stays below them, 100% Amazon's going to go to 136, about 4 points. Let's see these strike prices for Amazon. Again, these are not completely accurate because stock market is closed. Okay, let's check next week. Wow, again, yep, Amazon's are pretty cheap. So 136 costs $51. 135 though, which is what I would buy, cost $37. And you buy two contracts, absolutely incredible. And when it reaches there, it's gonna go what, 136. Those contracts are gonna cost like $200. So 37 to 200. That's a lot of money. That's probably what, 600%. Yeah. Especially if you buy a lot. I'd buy like 5. That's $1,000 right there. All right. Okay, the stream just hit 1 hour. Thank you guys for everything. Please comment, subscribe, and every day we are getting better and better. Thank you for watching this, and I mean, you definitely got your money's worth. You definitely got your time's worth. 3 live trades and 15 examples. Enjoy, and keep around for part 2. Thank you for everything.